Hello, everybody. Hello, everybody who's watching us on LinkedIn, on YouTube, or on Facebook. My name is Rafael Gonçalves, and I'm the communications coordinator for KoreTalkX. And I'm very happy to be here today in our 14th edition of this Core Talks. This is the first time that I'm interviewing the one and only Sarah Hanks. I was just telling her backstage that I love reading her texts and her articles, and I learn a lot daily. I love reading her content, and this should be a great opportunity for us to debate a little bit about what we're doing and to learn a little bit more. Learning, it's always good. So Sarah, welcome. Thanks for accepting, and tell us a little bit more about you. The stage is yours.
Okay, well, I come from a very, very traditional securities and corporate law background. Way back when, and I mean like previous century, I worked at the SEC for a while. I was chief of the Office of International Corporate Finance, and I was a specialist in international IPOs and the like. Spent a couple of decades as a partner in the world's largest law firm at the time. And then in the financial crisis, nothing much was happening. So I went over and worked as general counsel to the congressional oversight body that oversaw the Troubled Asset Relief Program on Capitol Hill, and never kind of made it back to big law. I started getting interested in all of the bills that were going through Congress at the time with respect to crowdfunding, and thinking, wow, there's some really interesting legal implications there. Started talking to some friends after the Congressional Oversight Panel had stood down. We were going, okay, so with these new laws, this is inexperienced small companies selling to inexperienced investors, retail investors, over the internet. What could go wrong with that? We said. We thought there needs to be a company there that makes sure everybody is complying, the trust layer that can say, well, this might be a good company or it might not, but we can tell you that what it's doing is legal. And that's where we started, and we've just expanded from doing purely due diligence and compliance to doing filings, to doing disclosures. Because we were securities lawyers, originally people would ask us securities law questions, and then they would send us chocolate, which was lovely. But then we started thinking, well, we could get paid in actual dollars, fiat money, instead of, chocolate. So we stood up CrowdCheck Law, and now we provide a wide range of legal compliance disclosure services for all of the online crowdfunding exemptions, Reg CF, Reg A, and 506C. And it's keeping us pretty busy.
Yeah, I just love the way you could sum it up in one sentence, like inexperienced issuers and inexperienced investors. What could go wrong? I mean, everything, right?
Yeah, and it pretty much is everything. I mean, as we were chatting backstage, I mean, I think I am like the crowdfunding wet blanket, because I'm forever saying you're doing it wrong. There is all of this stuff you've got to comply with. Just because it's a whole new online environment doesn't mean that the old laws still apply. The old laws still do, and they're still complicated, and you still need a guide to help you through them. And just ignoring them, or I keep having the mom conversation with all of our clients. because they're like, well, those guys are doing that, and those guys are, and I'm like, yeah, if everybody jumped off the Brooklyn Bridge, would you want to do it too? So we do have an uphill battle to try and keep everybody compliant.
Okay, I see. Well, Sarah, just before we start, the first question I have to ask you is one thing that came to our attention recently is that we see the SEC announcing charges, right? I believe the most famous case was when Kim Kardashian was charged for touting on social media that crypto asset security. We also have other CEOs and other CFOs that also have also been charged. So has the SEC been charging more people, or is it just getting media's attention now?
I think it really got the media's attention because it was Kim Kardashian who got into trouble, and because the amount of the fine, which was $1 million, might not be much for her, but for a normal person, that's a heck of a lot of money. And so this is not new. I mean, the thing that the law that the SEC is enforcing here is the stock touting law. And it sounds terrible, stock tout, that sounds so sleazy. But it's basically it's Section 17B of the Securities Act, and it says if you draw attention to an offering, not even recommend, not even tout, just if you draw attention to an offering of securities and you get compensated for it in cash or chocolate or anything else or in crypto, then you must disclose who's paying you and how much and in what. I mean, it's a simple disclosure. And it's the same thing as, paid advertisement. You see those paid sponsorship legends on various disclosures. It's the same sort of thing. Don't tell people, don't get paid for telling people that there is an offering without telling them that you are being paid for telling them. And so it got everybody's attention because it was Kim Kardashian and she's all famous and everything. But this has been going on for a while. I mean, there's a famous boxer who's been, I think, fined twice for this kind of thing. And then if you go back like 20, 30 years, something like 20, it's showing my age, long time ago, there was one case where the SEC rounded up like 28 different plaintiffs and fined them for violating this section. And it's, like I say, it's really simple to comply with. You say you're being paid and who's paying you and how much. And you can have just a link from your TikTok ad or whatever, but you've got to have it. And it's a question not just of, oh my goodness, or the securities laws are so complicated and how could anyone know? You should know that if you are being paid to publicize something and you don't tell people, surely you should know as a grown-up human being that that's something that people would want to know. So I don't have a lot of sympathy for people in this space who are using their celebrity to promote things and not telling investors that they're doing so. But yeah, it's not new. It's just got really high profile. And there's another case, a couple of weeks ago against well-known publisher who was doing something similar. I mean, they got into trouble for a whole bunch of things, but one of the things they were getting into trouble for was again being paid under the table. So it looked like they weren't being paid to publicize offerings, but in fact they were being paid because somebody was picking up a huge bar tab or that sort of thing. So however you're being compensated, if you are getting something for telling people about an offering of securities, then you've got to tell people that you're getting compensated.
Yeah, this is basically it. If you're being paid to do something, it should be told. People should be aware, right? And it's good that it took Kim Kardashian to do something wrong for the media to get attention. But yeah, as you said, there are lots of small companies and small businesses and people that are starting to invest, and they might not know exactly where they are getting into, right? uh, I mean, it's still something very new. The commercial internet, as we know today, is what, like 30 years ago, 35 years ago. It has surfaced not long ago. So uh,
Yeah.
uh, the, everything's been changing so quickly that it's important to keep track of compliant things, right? Uh,
And there are challenges, of course, because as you say, the internet is compared to the securities laws, which have been around for 90 years. The internet's relatively new, and there's a new challenge every day. And so the SEC is constantly playing catch up as they try to apply these, old laws to new situations. And we are forever going over to our friends at the SEC and saying, okay, so we've got this really weird situation for you. We want to use Reg CF to do series offerings, or we want to do this thing on TikTok, or in the middle of a video game, we want to advertise the securities offering of the company that's making the video game. And poor SEC is like, oh my god, you keep coming up with these weird fact patterns. But that's the thing. I mean, our clients are really innovative folks. They are going to come up with weird stuff, and some of it will work and some of it won't. But what we have to
mhm.
do is make sure it's compliant, however weird it is.
Yeah, you cannot play a new game with old rules, right?
Yeah.
And it's literally making rules as the game's going, right? Because
Yeah. Now, we
yeah,
spend a lot of time going, okay, well, we don't have any guidance from the SEC, so we think this is the appropriate thing. It fits with the spirit of the law and the letter of the law as far as we can interpret it. So this is what we're going to do. And, hopefully it's well meant and becomes industry practice. We do
yeah,
see
that's
people copying what we do a lot.
yeah. There's something else that I'd like to ask you, because this is something that we listen to a lot from our core clients or other core partners, and we even have a sentence in our blog that says that it's not enough for the broker dealer to simply do the KYC verification, right? The know your customer verification. You need to keep asking the hard questions. Whether you're an investor acquisition firm, I mean, you're creating and delivering the messaging, the assets. You must also be diligent in ensuring that you are telling the truth on their behalf and you're telling the right story. What kind of hard questions can we keep asking? Can we ask to even help the SEC come up with these new regulations and this new setup of the market that we have?
Yeah, well, I mean, I think that the constant question, and I know this might sound trite, but the constant question we keep coming up with is this accurate? What we're seeing is, and this came up for me in spades yesterday as I was going through, an investor report that was talking about a particular sector where there was stunning growth. Um, and the SEC is not used to seeing this kind of promotional material, and the SEC is also. And I think if you go back to what they were expecting this market to look like, they were expecting that the disclosure in the Reg A Form 1A or the Reg CF Form C would be the thing that would be used as the marketing um, to the investors. And as we all know, and it's very sad, the investors aren't reading that. They're reading the online offering page and and the advertising, and we can talk about the advertising later. But when you look at some of the statements that are being made online, um, everybody is responsible in different ways for making sure that whatever is being said is accurate and not misleading. You're not giving a false impression of the potential upside and the potential downside. And so I think everybody in all of the service providers, whether it's the investor acquisition firms, or the other marketers, the publishers, the brokers, the lawyers, everybody has an interest in making sure that this market does not collapse because it just gets a terrible, terrible reputation. And everybody's got different levels of liability. To go back to what you just said about the brokers, brokers have the highest level of liability, but everybody else is not kind of exempt. And what everybody in this market should be doing is looking at the information that's presented to investors as a whole, not just sort of picking out bits and go, well, all of the risk factors, and there's huge risk factors in the offering circular, and so the investors should have read that. Well, we know they're not doing that. So go to put yourself in the position of the investor and say, I am going to look at this, and here on this offering page there is this statement about this being a low risk investment opportunity. Is that accurate? Does that give a misleading impression? And those are the hard questions, because you can always kind of find some justification for whatever it is you're saying. But when you take a normal investor, like my dad used to do day trading, and he was a former CFO, but he wasn't a sophisticated investor. And you got to ask yourself, if my parents read this, would they understand what the risks are? Is this a balanced presentation that's being given to them?
Mm-hmm. Yes, when you talked about your father, gut feeling over technique, right?
Yeah. And my dad would, he got all of those newsletters, and he believed in what they said, and so the publishers too have an obligation, and this is we talked about the enforcement actions by the SEC. Well, there was a recent enforcement action against one of the publishers, and when you look at the way that all of that information was presented by the publisher, there's a huge amount of hype there. And that is not good for anybody.
Mm-hmm. Yes, and also marketers, writers, as a whole, editors. It's also we as social communicators, we learn very early, in early stages in college, about social responsibility, right? And this is something that we are dealing with lives here, right? Because the entrepreneur is a small business, the investors are small businesses, and you cannot not know a law and just, oh, sorry, I broke it. I didn't know. I didn't know it was illegal. It was wrong. You cannot say that in court,
Yep.
right? I believe this is worldwide. There's not a single country where we can say, "Oh, I didn't know I couldn't do that. I'm sorry," and the judge would just go, "Ah, don't worry." So
yeah, you meant well. Yeah, and this is especially with entrepreneurs, this is always going to be a challenge, because entrepreneurs by their nature, they wouldn't be entrepreneurs if they didn't believe in themselves and their team and their offering, and so they are going to promote stuff. This is going to be the category killer. This is going to be the app to beat all apps, and they really don't understand some of the nuances between what we lawyers call puffery and misleading statements. So you could say we are the best muffin shop this side of the Missouri River. Well, that's puffery, that's fine. But if you say we are the fastest growing muffin shop, that's an actual fact. And making the distinction between those two, well, this one is okay and this isn't, is a challenge. I mean, we keep we have a huge internal manual, several hundred pages now, for
wow.
yeah, and one chapter of it is our bad words list that we are always adding to. Things that need to be challenged, leading, proven, outstanding, staggering profits. Came across that one yesterday. And then as the years have gone by, we've added not just bad words, but also bad sounds. Ka-ching! Can't use that.
Mm,
We've actually had that. And then images, things like with stock prices going up and up and up. Nope, can't use that.
yeah, you need to have a team dedicated to update that as well, right? Like on a daily basis.
There's always new bad words. It's amazing.
Yeah, and they keep getting worse or not.
Um, I think there is, and to go back to one of the things I said earlier, I spent all my life these days going, well, you can't do that, and everyone's like, well, those people are doing it. Like, yeah, but the SEC is going to end up suing them, and it's the mom Brooklyn Bridge thing again. But yeah, I think it is getting worse. The one thing about this market is we've seen in the Reg A market much better companies using Reg A. We're seeing better companies using Reg CF. But on the other hand, we're also seeing techniques and marketing that I think is problematic.
Mm-hmm.
Some of what the marketing companies, part of the problem is that you've got marketing folks coming in from the non-securities world. And they, like the entrepreneurs, don't see the difference between puffery and misleading statements. And we see misleading statements all the time.
Mm-hmm.
Some people talk about there is no fraud in crowdfunding or very little fraud in crowdfunding, and we always push back on that because you cannot go into a Reg CF filing, especially because there's more problems in CF than A, because the SEC is not reviewing that. And it's impossible to go into a Reg CF filing and not find at least 3 misleading statements. And misleading statements are fraud. So, to go back to the
Mm-hmm.
accuracy thing.
Mm-hmm. Yes, yeah. As a journalist, one thing that I study a lot, I study a lot about fake news, and it's just like you said, misleading statements. It's just a lie, and lying is, you can call it a bad word, you can call it fake news. It's still a lie. It's still unfair. It's still not
Yeah.
true. I mean, it's incorrect, and it should be targeted, of course. And this is something that communication professionals, marketing professionals have to keep in mind. You have the bad words list, and we cannot just keep finding a new way to say that. In a little different way. We have to make it better. We have to make ourselves better, and we have to find a better way of doing things. That's basically it. That's nice. And another question we have to ask you is about these online platforms. We have funding platforms, and we have a lot of companies that help you invest and help you suggest investments. And some of them grow out of nowhere, and some of them just disappear. How can we know? I'm an investor. How can I know if an online platform is compliant? Which steps would you recommend for me to follow? Which should I check? Can the SEC help me? What should I do to know if an online platform is compliant?
Yeah, that's a real challenge.
That's the $1 million question, right?
Yeah, and you don't know how well any of these platforms are, analyzing the offerings that are on their sites. On the one hand, you've got the really well-established platforms, most of whom have a compliance department, and they have, legal departments. They're still small, they're still young, but they have them. And they have very routine. They will check: has the company approved? Does the company actually exist? Which is always one of our first questions, because you'd be amazed how many times the company actually doesn't. But does the company exist? Has it approved these securities? Have they been properly filed with the states? Have they been approved by the board of directors? On all of these steps. But the one thing that they can't do, because nobody's got the resources, is to go in and take each individual statement and fact check them, which is one of the things that CrowdCheck does. But that's knowing who it is who's doing that and who is not doing that is clearly not apparent from the outside. I mean, you go onto platform A and it looks like they've got masses of companies, and you think, oh, do they are they doing due diligence? You just don't know. The only way you really know is if the SEC or somebody comes in and sues them later, which of course will happen several years after. So some of the platforms are just slick and they're great. I think one of the ways that if you really wanted to do homework before investing, and this is not what the burden should not be on the investors. But if I'm an investor, I'm going to go in, and first thing I'm going to look at the actual filing by the companies on the site. And you can pretty much have a good idea by going through the SEC's EDGAR filings. You can see what the company has filed for, whether it's updated, and if it has ongoing reporting obligations. But I know those things because I'm a securities lawyer. A normal person is just not going to be able to see, oh, this platform has this company on, and this company is non-compliant with its ongoing reporting, so I think the platform might be at risk. That is a huge burden to put on somebody who's trying to decide whether to put $500 in a company or not. So it's difficult. I mean, we're in a period of consolidation. There's a number of people moving in. There is 50, 60 Reg CF platforms out there. That's too many. There isn't enough business to support them. So there is some consolidation, some purchase. And so, that's one of the things that we've been doing is assessing compliance of platforms. But that's something that investors shouldn't be required to do. So yeah, the only clue that an investor has is, well, nobody's closed them down yet. That's kind of unsatisfactory.
Yeah, that sounds pretty solid. Nobody should.
Yeah.
That sounds pretty solid. Yeah, I like it. I like it. That's good. That's good. But yeah, I agree with you. I mean, the issuer, the companies should have should be careful, and the investor shouldn't have to worry on that, because if the offering is live, if the company is live, if the company is there, we should believe things are okay, right?
Yep.
And that's the great struggle that the SEC must have, and you guys at CrowdCheck must have on a daily basis, because rules are changing, digital assets are changing, securities are changing daily, and we cannot play a new game with old rules. That's just how it goes.
Yep.
There's another question I'd love to ask you, because we have had this question before in one of our posts or blog postings or social media. I don't remember exactly. It's about let's suppose that a company has a live Reg A offering. Can I use call centers to offer or to gather investors? And how can we use compliantly? Can we use call centers to call people and offer my shares?
Yeah, it's a really good question, and there's only complicated answers, of course.
I'm sorry, but I gotta do them. I gotta ask these questions.
Yeah, so I mean, in theory, yes, you can use call centers, but the thing is that the call center itself must be compliant with the securities laws, and I'm not saying anything misleading, as well as it cannot be acting as a broker-dealer, for example. So one of the challenges that we have with crowdfunding in general is the broker-dealer registration requirements. People who pick up the phone and say, hey, you should buy these securities, could well be acting as brokers. A company is always exempt from the broker-dealer rules when it's selling its own securities. But its affiliates, that is, its officers and directors, need to be clearly not acting as broker-dealers unless they get registered as such. And there's this complicated rule 3A4-1, which you cannot, it's an exemption, a safe harbor from the broker-dealer rules, but it applies more to hedge funds and more to entities that are doing an offering that has a beginning and an end, and where the offerings aren't being made multiple times a year. With crowdfunding, these offerings mostly on the Reg A side open for 3 years, on the Reg CF side usually at least 6 months. So it's an ongoing offering. It's very hard to fit into this safe harbor that says, well, you can only be doing either once a year, and if you're doing any marketing for the company, you can't get compensated by reference to the amount that you sell. So there's a lot of complicated rules there. And that's just on the company side. Looking at the company's agents, like a call center, if the call center is doing nothing more than noticing that Mrs. Jones was putting in her information and somehow failed or dropped off, and she got to the point where she had to enter the routing number of her company, of her bank, and then didn't go any further. Fine for somebody in a call center to say, I noticed that you seem to have had a problem. Can I help you through? Can I help you with the logistics? Can I help you? This is how you look at your checkbook and you see there's the routing number, or you look at your statement and this is how you fill in that information. What they can't be doing is then, well, Mrs. Jones is like, well, yeah, I stopped because I wasn't sure if this was a good investment or not. What do you think? Can't answer that question. You absolutely can't. And what you absolutely can't be doing is like boiler rooms, picking up the phone and saying, hey, have you heard about this investment? I mean, you can't be out there marketing. So the call centers, whether they are brought in-house, which some of our clients have done, they actually work as employees for the company, or whether they are outsourced. What they are supposed to be doing is logistical stuff, getting us close to this exemption I mentioned, the safe harbor 3A4-1, and not doing any selling. We believe that, I know that Oscar at KoreTalkX has been distressed at the amount of activity that there is. There's some Canadian entities potentially going further than that. The one thing that I will note as lawyers, we very rarely get looped into that conversation. And I think it's because they think if they tell us what's going on, we're going to stop them doing it, which should be a signal to them that they shouldn't be doing it in the first place. I mean, if you're afraid that your lawyer is going to stop you doing something, just don't do that thing.
Yeah, if you want your lawyer to agree with you, you don't need a lawyer.
Right? Yeah, exactly.
You don't need a lawyer. Just like when you go to the doctor and you have a back pain or something, and I'm not gonna take that medicine. So why did I go to the doctor in the first place?
Yeah.
Yeah. That's exactly how I think. And so basically, the call center, it is okay to use it, but the call center has to pay attention to the approach, to the script, right, that they use.
Yeah, exactly. I mean, scripts are really good in these circumstances. Because that helps people who are not going to be trained securities lawyers. They're just call center folks. It helps them through what they should and shouldn't be doing. And you should also have a list of complete no-nos. Like, if Mrs. Jones asks, is this a good investment? I can't answer that. But why don't you read the offering circular? And there's more information there. Pay attention to the risk factors, and then make up your mind. Of course, that's
there are ways to act, right? It's not like you're actively selling them, but you are, but you are not.
You're just assisting them. You're assisting them. I mean, the SEC's end object is that investors make informed investment decisions. The SEC's approach is full disclosure. It's not merit disclosure. It's not, we're going to decide whether this is a good investment for you or not. But you have to get the tools into the hands of the investors. And here is the disclosure document, and you read it. And hopefully, if you read a well-drafted offering document, whether it's the Form C or the 1A, you should, at the end, be able to make an informed investment decision. It might not be, it might be super risky, but if you understand the risks, that's great.
Yeah, there are no investments without risk, right? I mean, risk depends on your tolerance to it.
Yep.
Every investment has at least, even if it's small, but there's risk. There's always risk there. Yep. And just we are over half an hour, so I just want to ask you one last question, because on October 26th, you will be joining us in our core summit, our pocket sessions on cannabis. This question is going to be answered then, of course. We're going to talk more about the cannabis, especially after Biden's last announcement. The decriminalization has probably started. But for cannabis, we're going to talk about that, but you can talk about that for the general public as well. But how can I know which regulation I have to use for my company? How should I know if Reg A is better than Reg CF for my case? What questions should I ask myself as a company?
All right. Well, I mean, the starting point is always going to be what exemptions am I eligible for? Because, as you know, Reg A is US companies only that are actually managed from the US. Reg CF is US and Canadian, sorry. US and Canadian actually managed from the US or Canada. Reg CF is US companies only, but there's no obligation that it be managed from here. So it could be somewhere else, I guess. And then Reg D does not require that you have a presence here at all. Then you've got things like, are you acting as an investment company? That is, investing in other companies, holding other securities. So you always want to go through the eligibility first, and there's slightly different eligibility requirements for each one. So that's your first filter. And then the second question is, well, how much do you want to raise? Because really it makes, if you think that you want to raise or you can raise over 5 million, then obviously Reg A is for you. If you really aren't sure, and you don't want to commit yourself, you want to just sort of test the markets, then CF might be the way to go. And it's really fairly simple to go from a CF to an A if you have decided, if you said from the if you know from the beginning that that's the way you're going to go. One thing that we do see is if you're doing a CF and you know you're going to do an A, you really want to warn people, investors, that we might be doing a Reg A. We're considering it, and of course, if you mention the possibility of doing a Reg A, there's special language that needs to go in, and you want to warn people that there may be a completely different set of information. And you might make a different investment decision if you got the Reg A information rather than the Reg CF information, which is much more limited. Think about what your trajectory is going to be before committing to the CF. But if you're looking at first for less than 5 million, CF would be the starting point, providing you're not Canadian.
Yeah, money.
Go Reg A.
Yeah, money without a plan it can be either good. It can't be good. If you can raise money without a good plan, it cannot be good. You have the illusion of having a lot of money and being able to do a lot of things, but the best thing is to have a plan, and of course read the regulations, right? And look for appropriate partners to help you get there, right?
Exactly. I mean, the plan is really important. You have to, if you don't know what you're going to do with the money, then maybe you shouldn't be raising any. You've got to, and especially with Reg CF, where you're able to set a very low target amount. So we're really looking for 5 million, because only if we get 5 million can we build the new warehouse. But we'll set a target of 10,000. Well, that 10,000 is just thrown away because you didn't have a plan for it. So think carefully about how much and why and what you're going to do with it.
Yeah, like Alice in Wonderland. If you don't know where you're going, any path will do. Right?
Yeah.
Yeah, any path will do. So, Sarah, it was great having you over. I hope we have more opportunities to talk and to ask you hard questions. I'm sorry for those, but somebody's got to answer them.
Yeah,
But
I wish there were more answers.
yeah, let's hope. Let's hope. Let's keep working for them. And you will be joining us in our core summit on the October 26th. The core summit will be actually from October 24th to 28th, but your session is on the 26th. The cannabis business has been growing a lot. Biden's announcement last week on the decriminalization of possessions and everything. I think it can be a real game changer. But that's it. I want to thank you for your participation. And if you have any final message for our listeners and our viewers, please, that's the time to do it.
Okay. The only message is, regardless of what everybody else is doing, comply with what your lawyer tells you to do.
Yeah, always rely on a good lawyer. That's it. And thank you everyone for joining us. If you're watching us on LinkedIn, please don't forget to follow the page. You can also subscribe to our channels on YouTube, on Spotify, or your favorite podcast player. We'll be back soon next week, and the other week we have the Core Summit. So stay tuned, and we'll see each other more often. Thank you, Sarah, and thank you, everybody. Bye-bye.
Thank you.